Yo, what's up, everybody? Good morning, good nightin'. We are live. I'll give it like a few minutes and then we're gonna start our day. So today is gonna be a very different day than other days. We're first of all going to briefly look at Bitcoin, and then we're gonna do a bunch of different questions and answers that I've taken. Or sorry, not questions and answers, but we're gonna take questions from the Discord group of mine, and we're gonna answer a lot of day trading and technical analysis related questions that are within my expertise and within my experience. So if there's anything I cannot answer, I'll give you a straight up answer and tell you, hey, it's outside of my experience. I have no idea what the fuck that means. And I'm gonna be very honest, I'm not gonna fake it, put it that way, all right? So let's give it some time. I apologize if there's some sound in the background right now. Our cleaner is here, and unfortunately I need to clean my office / living room, but I also wanted to stream right around now as well before lunch. So we'll just give it a few minutes and go from there. I'm missing out today on some coins to trade by doing this live stream, because right now I would be trading a coin called UMA. UMA has moved up a significant rally today, over 45%, but if you take a look at it from midnight, it's actually moved up over 91% so far, which is incredibly significant. There's no resistance at all. I don't think there is. Let's just check another exchange to see if there is. Maybe it was like an old coin that was on spot before. Yeah, okay, so it was an old coin on spot. It's nearing a resistance, actually very much so nearing a resistance soon. You can just see it inching towards here. So everybody put this coin on your radar, okay? Put that coin on your radar. The high of this coin is 4.23, okay? 423, so 4.23. So go to your futures and also put a resistance at 423 as well, because it most likely will be the same, okay? So change that to 423. And whoa, that's actually far away. Hold on. I just gotta check. Is there? Whoa! You gotta be careful right now, okay? I don't even need to look at the exchange to tell that there's probably a gigantic negative funding rate right now. Am I right? And I am right. Boom. So did you guys notice how I knew that right away? Because I noticed on the weekly we're at $4.05, but on the futures we're much less than that. Okay. So what you guys need to do is get both of these coins on your watch list right now, and you're probably gonna benefit immensely from this coin. Actually, I'll just change that by percentage. There we go. Okay, so right now there's a high probability, I'll say it straight up, that we're going for that $4.23 resistance, and there's also a very high possibility that UMA on the futures market is going to catch up to the price of the spot market very soon. So after this live trade, I'm not telling you to enter the position right now. I'm just telling you that the negative funding rate right here is incentivized for the long traders to go into a long position. If you are going to short, at the end of that funding countdown, you will be charged negative 2% of your position, which you don't want that. Okay, so right now, because the spot price and the futures price is a difference of about 9-10%, you're incentivized to go into a long position. So after this live stream, I'm most likely going to try to jump into a trade if I can on UMA. Okay, let's take a look at Bitcoin first of all, then we're gonna answer a bunch of the questions. I made the prediction straight up, guys, that Bitcoin is likely to hit anywhere between $34,000 to $37,000. Okay, I made that prediction right here on Bitcoin. Hold on, where did I make that prediction? I made it in the group, and I also made it live on Twitter, or posted it on Twitter. Okay, so people definitely saw this. I expect a target between 37 to 34K sometime between March to June, then a heavy accumulation phase which will begin that leads into the bull market from Q3 to Q 2024 to Q4 2025. Some quick data to back up why I believe we're gonna be in a massive rally. Let me just get into it. Okay. Let's take a look at the halving. Okay, let's take a look at the halving of the previous years of 2020 and 2016. Okay, what you're gonna notice, what you're gonna notice is that from when the halving began to where the all-time high begins or ends, okay? If you're gonna notice this, in 2016, we lasted about 525 days until the all-time high was hit, okay? And here, we lasted about 546 days, all right? So based on that statistic right there, or that metric, if you take a look at the BTC halving event, which is likely to happen around April 12, right here, okay? If you take a look to the 540 days, do you guys see with me here? Oh, I gotta go further. Oh, it ends. It doesn't even show any data past that. It doesn't show any dates. That's shitty. Okay, here we go. On this it does. So April 12, okay? If I go above 520 to 540 days, what do you see? Okay, take a look at the red there. So here's 520 days. That's about September, okay? From where the halving is. If I go to about 545 days, we're talking about October. So I'm expecting an all-time high to hit based off of previous history of the halving occurring and then rallying and leading into a bull market. It's going to be anywhere between 500 to 600 days based off of all statistics that we've seen. Of course, data might vary and it might change, but is that my mom? No, it's not my mom. My mom lives in Canada. That's one of the cleaners that comes with us everywhere we go. Every time we move to a new house, she's been with the family for a very long time, and we take care of her extremely well. She's like family to us. So based off of that, you can just assume that we might finish the bull market in 2025 Q4, okay? So that's just something small that I'm predicting. And the reason why I say this specifically, I expect a target sometime between March and June is because of this, okay? The first halving started on July 2016, okay? So if we go all the way back to July of 2016 to the Bitcoin index, and this is a very important point for you to understand. So the halving was in July, right? July of 12 or so. We'll just roughly say around here. Okay, July there, 2016. What you're gonna notice is that either before the halving or after the halving, there is a major capitulation. Okay, this is the halving in 2016. And then the halving in 2020 was May. Okay, so we're gonna go to May now. And what you're gonna see is something very similar. Okay, so May is right around, what date was it exactly? May the 15th, roughly, okay? So May the 15th, around there, what you're gonna see is that before the halving, there is a major capitulation. And slightly after the halving, there's a stall period. See the stall period? Sure, it rallies, but another drop occurs. So what we can confirm is that before the halving or after the halving, a rally may occur or a sideways trend may occur first. Let's take a look at this one. Do you see it? After the halving, right here, okay, there's a sideways period of just accumulation. So do you guys see it? Or slightly before too. But there's no doubt that right here, this was a period of like 20 days, and then we drop, and then we sideways for a while as well. This is your best time to get in. In my opinion, whether a drop occurs or not, the best time is still to get in after the halving roughly or slightly before. That's my opinion. And that's why I have cash on hand. And that's why I will be going in huge So you guys see, there's a sideways trend that occurs after the halving. Okay, this one happened for 66 days. This is why I'm saying our halving is it's April, right? So between March, April, May, June, somewhere like that, I expect a major drop to occur, and that will most likely be the best time to get in based off of history. Okay, so let's move on and talk about Bitcoin. Actually, there's not much to talk about, guys. I gave you guys my medium term, or kind of like medium term, like 2-3 month prediction of dropping to anywhere between 37 to even 34K. And a quick Elliott wave count for everybody. Okay, I'm gonna give you guys a quick Elliott wave count. I do not believe that this right here is anything at all. That is not, in my opinion, this is more so a corrective wave than anything. Okay, if so, this here is all part of one wave. That's my opinion. Okay, that's part of one wave. Sometimes the waves just don't make sense, but this is the best count in my opinion. Okay, this is the best count. If you go into a small, tiny ass time frame, you will be able to find a 1 in there. It sucks, but I mean a 1, 2, 3, 4, 5. It sucks, but this would be the best count in my opinion. Okay, and then this would be the ABC. I would consider that the ABC in there. Okay, so that's 2. Also, you take a look at fib extension right here, and what you see is that the wave 3 is bigger. Okay, the wave 3 is bigger than wave 1. It fits the criteria the best. And 1 simply double tops. That's it. Okay, 1 simply double tops. Wave 5 has lower RSI, bearishly diverges compared to wave 3. That's the best count, man. Okay, whether it's starting from here or here, doesn't matter. This is the best count. Okay, no matter what. I've seen other counts where people are like, this is a 1, this is a 2, this is a 3. Oh, sorry. Not that. But I've seen some counts like, that's got to be a 1, 2, 3, 4, 5. I'm like, no, that doesn't look like it. There's no way. There's no way that the B is going to get higher than a C like that. Like, it just doesn't make sense to me in this particular case. No fucking way this is the count. Like, there's no way, right? So I believe this is the 3 that's finished already, and the 4 is forming, okay? The 4 is forming, and it's most likely going to hit up to down there, and then who knows where 5 is going to go, right? Who knows? But realistically, I think we could hit a potential golden ratio range. So that's my ideal target right here. Ideal target is between 0.5 fib and also golden ratio right here. That would be the perfect situation, right? Or another ideal situation would be a deeper retracement to like roughly wave 1 territory. If that happened, if it hit 30K again, I would be ecstatic. I would be like, I would do a lot of things to find more cash, put it that way. Okay, so that's my thoughts for BTC. So now let's get into the questions from Discord. Okay, I asked Discord today. Someone commented yesterday that kind of annoyed me, and he actually got banned for multiple reasons in my group. But he said something like, "Oh, apparently this is copy Philakone group." I don't think so. I'm here to teach you, right? I'm here to mentor you the best that I can. And in turn, it's up to you to adapt these methods to your own personal trading or not, right? So think of it like you have multiple people that you're learning from, multiple styles. So from all these different perspectives and knowledge that you're gaining, you're ultimately going to mold it into the kind of trader that you will become over time, okay? I'm just going to read some of the comments here. Yeah, oh my God was a game changer for sure. Oh, Music Go. That coin made me an incredible amount of money in 2017. Oh, Music Go, IOTA, EOS, XRP, Ethereum. Those were the coins where, like, that was the only time. I look unhealthy? Okay, thanks, bro. I'm just fat and I'm Turkish and I just woke up. But thanks a lot, bro. I'm basically going to mute people that have no point of being in this conversation, right? If people are gonna just say negative things and don't stick to the topic, and they're just commenting on stupid things, they're just going to be muted from the group. So Kingslayer, you're muted from the group. I'm here to give you my time. If you would like to criticize ridiculous things, such as my appearance, right? You don't need to be here, and I also don't need to be here as well. Do you understand what I mean? Also, I'm Asian, and I'm just fat because I live in Turkish. The lighting is bad, but not that I give a shit about what people think of me, to be quite honest, okay? So then, okay, let's stick to some of the questions, and I'm going to stick on point here. Okay, so some questions I will not be answering. Okay, well, like someone suggested to me, hey, Philakone, can we have a more detailed, thought out process of how to scan the market from Jolly? And those are questions I'm not going to answer because I've given literally a dozen scans already. It's up to you to watch my methodology of scanning. I'm not going to write out the fucking steps for you, to be quite honest. Like, there's no way I'm going to write out the steps for you step by step. This is what you do. This is what you don't do. Fuck no. I've got better things to do with my time. So it's up to you to watch it or not and record notes yourself if you want. Another question I'm not going to answer is ridiculous questions like how do you find the bottom of a coin that should rally? When you think about how silly these questions are, it's like, I'm just giving you examples of silly questions. It's like, how do you find the bottom of a coin that should rally? If anybody knew that answer, they would be like a billionaire. Do you know what I mean? 100% they would be a billionaire and they'd be like the top of the food chain in trading. You never know when a bottom is. You never know when a rally should even begin. Like, you don't know any of this. All you can do is use the best technical analysis methods that is known to you and that you have experience with, and make the best educated guess. That's really all you can do. So those questions I'm not going to answer. Okay. So CB asks, how do you get out of a trade? Okay, that's a good question. I'm just going to make my window a little bit smaller here. Hold on. Okay, here we go. Okay, here we go. So CB asked me how to get out of a trade when is your idea invalidated? Well, I trade a lot based off of chandelier exit indicator. Okay, to know when to get out of a trade, you got to know when the trend has changed and when you've officially lost that trade, right? So how do you know that a trend has changed? In my opinion, it would be using the ATR. The volatility is extremely important to understand. And if you understand that the volatility has changed, that would invalidate your bias, right? So in my opinion, the chandelier exit indicator is a great tool to use to tell you when to get out of a trade. Not always enter a trade, but get out of a trade, because that's where the trend has changed. And that's why trailing stops are incredibly important. So I'll always answer in a very basic way, and it's up to you to learn more about the indicator. Saeed asks how to manage a portfolio in bear cases. In bear cases? But bro, we're in a bull market. I don't understand your question, so I'm going to skip it. How to manage it in a bear case? You don't. You only manage it in a bull market. Literally, you only manage your portfolio in a bull market, and you should never, ever, ever hold through bear market cycles. Let me give you an example. I know a lot of people from my hometown that are still holding dumb coins like V-Chain or fucking or EOS. Like, literally, they're still holding coins from 2017. And then they still didn't sell their coins in 2021's bull market. And they're still holding these shit coins. So the last thing you should do is be one of those people that doesn't sell or doesn't understand how to identify when a bull market has ended. And then you're still holding on to these coins, and then you've lost out on all of your profits. I've heard of stories where people have seen their portfolios grow 20, 30x, but they didn't sell because they got greedy. And then those 20, 30x, it turned into nothing almost, turned into like 2 or 3x by the end of the bull market. So you should never be holding through multiple cycles. You should learn how to identify when the bull market has officially topped out and when the trend has changed already. Okay? Like the ones you had recently, choosing coins to trade or not, scanning, filtering. This one here, I have explained it many, many times already through my, like, how many times have I gone through my thought process? So the problem with this is you guys, okay? You, like, when I scan through my coins and I'm going through them one by one, okay? One by one. I literally do it live for you guys every fucking day almost, right? Literally every day I do it live almost. But you guys go AFK for that shit because I say things like, oh, maybe you guys can come back later because this part's boring. So it's kind of your fault for probably not paying attention because I rationalize why I put a coin on there on my watch list and why I don't put it on my watch list. So if you actually watch my entire 15-minute scan, you're going to learn a lot. So I'm not going to answer these types of questions because I understand like Uvi or someone who asked me that earlier, Jolly, you guys are just kind of wanting like a cheat sheet, you know, like a too long didn't read bullshit. And I understand people like that. I'm sorry to call you out, but I'm not going to give it. If you want to learn, you're going to watch my entire process, okay? Spring KSD, fake outs, bull traps, bear traps. Well, hold on. I always click to see how new of a member they are, which can show me that they have my latest course, right? So the best way to not get bull trapped or bear trapped, first of all, is like you can't just let's just say, generally speaking, there's like a triangle, okay? Like there's a triangle that's forming an ascending triangle, hypothetically, and you know that like there's a lot of pressure. Okay, there's a lot of pressure. Well, first of all, general rule is maybe wait till you get closer to the apex near the end of higher lows and the same highs to try to break out. That's one rule. Okay, you don't want to just try like on the second attempt because you might get fucked over. Another rule is as you get closer and closer to the potential breakout, you must zoom in to a very low time frame. Like I'm talking about a minute time frame or even lower because you must observe first of all the volatility and secondly the volume. Okay, if there's like a green candle that pops out of it with a lot of volume, you got to maybe wait a little bit to see how the second candle is going to be. If the second candle is like kind of neutral or slightly bearish with no volume, then most likely it's not going to continue to the upside, right? So that's another way you prevent yourself. Like you can't have that FOMO of entering just because you see a little puncture. It's about self-control, in my opinion, of not getting bull trapped. And the best way, though, to not get bull trapped is trading the continuation. I barely and rarely trade the breakout nowadays because of exactly what you're talking about. It's about getting stopped out quite often or getting bull trapped with a wick, right? So the best thing to do is just to let that stupid breakout happen by a good margin. Once you've confirmed the breakout with a lot of volume, right? Zoom into a very low time frame. Like if you see the breakout on a 30-minute time frame, you want to zoom into like a 2 or 3 or 4 or 5-minute time frame. Wait for a pullback. Wait for a pullback and let this guy form a pattern. Okay, let it form a pattern. It could be anything. It could be a pattern like a flag, right? It could be a flag pattern that's forming and then you trade the continuation. Or you have to find a continuation pattern that's occurring because it's going to give you more confirmation. So there's a delicate balance between risk and profit, right? So, or confirmation and profit and risk. If you think about trading the breakout over here, right there, right away, yes, your profit could be higher, but you have less confirmation and there's a lot more risk, right? So trying to find a delicate balance is important. Whereas if you are looking for a breakout that occurred, sure, there's going to be less profit, but in my opinion, there's less risk and a lot more confirmation, right? So if you think of it from that perspective, it's better to trade a continuation pattern. Like if that broke out and you're seeing a clear triangle like this occur, like an ascending triangle, it's probably good to take the continuation, right? So that's one of the best ways to trade, in my opinion. Because if you keep trading breakouts and you're not patient and you don't look on low time frames, you're going to get absolutely wrecked more than often. Like it's really rare for myself to get bull trap now unless it's like, unless it's like in a seconds time frame, like it's a 15 or 30-second candle that just does 10% upwards, and then you get fucked over with just as big of a drop. Those candles happen, okay? That was a good question. I like that question. Let's just keep going. Grid-based, that's outside of my expertise. I don't ever do that shit. Okay, these are good questions. Elliott wave and trend-based fib extension. Okay, so Elliott wave is definitely gonna tie in with Fibonacci and fib extension, right? I would say trend-based extensions would just be a target, like 100% target. Let me give you a really good example, okay, on Bitcoin. People predicted this shit. Like, people easily predicted this, okay? Let me just show you. Sorry, I have a clicking habit. The moment that this guy broke out, okay, the moment they broke out, people made predictions, okay? So what you would predict is at least a 1-to-1 extension, no matter what. You would predict a 1-to-1 extension, and maybe optimistically, it would hit a perfect 1618, right? Because based off of Elliott wave theory, okay, the third wave is often the biggest, right? It's often the biggest. It just doesn't need to be the smallest. Sometimes it's not the biggest, but as long as it's not the smallest, that's what matters, okay? So the moment that this guy breaks outwards, wave 1 breaks high, okay, you could, if you want to, just long the breakout above wave 1 high, but the continuation pattern is what I suggested to you guys earlier, right? Where it breaks out a little bit, you wait for a pullback and a pattern to occur, and then you trade that continuation pattern so you don't get stopped out, and there's more confirmation and there's less risk, right? Does that make sense? So yes, exactly, Pollinator. Wave 3 is never the smallest. It could be the second smallest, but never the smallest. So you would assume that wave 3 is bigger than wave 1, right? Especially if it's a diagonal, like, especially if it's not a diagonal. Here it forms 5 clear waves, right? Pretty clear, or clear enough. But I'm saying it's not like breaking up into 3s for each one, okay? So if these all broke up into 3s, you would assume that maybe, and it had a deep retracement, right? You would assume that it might be a triangle. Like, just as an example, if wave 1 had a really deep retracement, like I'm talking like that, right? You might assume that it might make a triangle because of the deep retracement and the 3 wave breakdowns, right? But this is a different case where it didn't break into 3s. So when it breaks above it, the first thing you would assume using Fibonacci extension when it breaks above wave 1 high is that it's going to do at least a 1-to-1. Okay? So you see it's going to do at least a 1-to-1. So you would expect wave 3 to be bigger than wave 1. Therefore, you would probably target somewhere conservatively slightly higher than here, right? Or you can also target to 1618, or maybe even take some of your profit here and then hold a little bit more of your position to try to take profit up there. So now if you take a look at Bitcoin here, for example, like, people made predictions. I targeted 38K like from who knows how long back after November. Okay, so this is your first wave. This is your second wave. Upon the break over here, easy. Okay, upon that break, you take your Fibonacci extension, okay, and then you're gonna be like, okay, at least a 1-to-1, right? 1-to-1 extension is over 40K. So it makes sense that once this yellow high is taken out, you should have traded the continuation, right? Like, so many continuations happen. We caught so many trades from altcoins because we knew Bitcoin was going to keep rallying. So now that we've hit the target, okay, now we're going to be correcting. Okay, now who knows where we're going to correct? But another logical retracement is like, not logical, but what I would like. Let's just pretend we hit 1618, okay? So let's just say we hit 1618 down over here. Now the next one, you would probably want to target something like a 618 extension, right? Or a little bit higher. So if we make a deep retracement here, right? If we go to 1618, notice how we double top here. But if it does slightly bigger, right? We could easily hit even higher. So that's how I use fib extension. I just use it for rough targets, but nothing more than that. That was a good question. I'd like to know how to calculate risk to reward better. I don't understand the question. Sorry, Manny. I don't understand the question because risk to reward is just a basic calculation of how much you could win versus how much you could lose, right? Percentage-wise or dollar-wise. So the calculation is pretty straightforward. But if you're asking, like, how do I find coins with better risk to reward setups? Like, how do I focus on coins that have the better risk to reward setups? Like, and how many trades should you be taking, right? If I'm interpreting it like that, that's a good question. So, and that's amazing that you're at your breaking point at work and you're ready to quit. Congratulations to anybody that is brave enough to want to become a full-time trader. Okay. So if you want to find the best risk to reward setups, you got to have standards first of all. Okay. Just think about it. You must have standards in anything that you do in life. If you want the best partner, okay, if you want the best wife, if you want the best, like for example, myself, okay, this is maybe a good analogy, maybe a bad one, I don't know. But in Canada, I used to date really bad women, like women who were just bad characters in general that were very toxic because my standards, first of all, weren't high. It was kind of like whoever wanted to party with me, whoever wanted to drink with me, hot chicks, I got crypto money. I'll go for these chicks that just want to party. I didn't have any standards. So because of that, I kept losing, if you understand what I mean. So I kept getting myself in a lot of trouble. But then all of a sudden, I moved to Turkey, right? Where I started having much higher standards in general. I stopped hanging around with a bad crowd, like with my friends as well. With my friends, I basically just hung out with my old group of friends that were just such horrible quality people, that were drug addicts, that were alcoholics, that were like the worst people that when I think back, why was I even friends with them? But the moment my standards increased and I started being selective about who to date and especially which friends to keep in my life, everything turned out a lot better for me. And I kept losing less. Do you know what I mean? And I'm saying this because it's like trading as well. You just cannot go for every single trade simply because there might be potential to win the trade. Does that make sense? If you go for every single trade and you don't have a high standards of which coins to trade and high criteria to enter the trade, then you're not going to be able to capitalize on the best risk to rewards. Therefore, it's imperative for you to document the types of trades that you're taking. So for example, over 100 trades, you should know exactly. And if I'll fucking bet you anything that none of you do this. And don't even lie to me, okay? Because I understand the difference between people who are really driven to succeed and people who just want shortcuts and people who just, they try just enough, right? But maybe some of you do this. Maybe, and I would be surprised if more than 5% of you do this. I'll bet you anything going back 500 trades that not many of you guys, I'm sorry to be rude in this way, but not many of you guys have a fucking binder. Ask yourself, do you have a binder of the last 500 trades that you took? And have you categorized them into I enter, for example, out of 500, right? Way back then in my days in 2018, 2019, and 2017, I had a binder of 1,000 trades and I would categorize them. And I found out that my favorite types of trades to take were shorting the fifth wave. Okay, shorting the fifth wave. And I made notes on all of them. Which ones I actually found bearishly diverging on RSI and MACD, or only one of them or none of them. And I found out that my win rate on these trades were so fucking high. They were over 80%. And then that's why now, after 9 years, that's the type of trades that I specialize in. Right? I made that skill even better. And then I also found out before that I used to chase parabolic coins. Out of 1,000 trades, I would go for these parabolic coins at least 10% of the time. and I would lose 80% of the time. So I would lose 80 out of 100 trades when they went parabolic. So the point of this is you have to document the kind of trades that you take, because then only you can identify the type of bad trades you're taking and the type of good trades that you're taking. Unless you actually have solid statistics from your own perspective of what you are doing, you will never fucking improve as a better trader. So if you want to take the best risk to reward setups and take the best trades, you have to know where you're failing first of all. And if you're not putting in the time to literally document, every professional trader I know that is made in the millions of dollars so far, they've all gone through this trial and error process of finding out what type of trader they are by documenting, okay? And if you don't document, just think of it for a moment. You lose a trade and then like you say to yourself, oh yeah, I'm gonna study the trade for a minute. I remember why I lost. I know why I lost the trade. I won't do it again. Now, I know that all of you guys do that. You take a look at your loss, right? If you're ignoring your loss and you're not even reviewing it because you don't want to look at your loss, that's the worst thing you can do. But a good thing is, of course, to review it and see why you lost, right? And try to commit not to do that again. Now, think of an extra step. So what I did instead of just looking at the trade that I lost was I actually documented my losses on a piece of paper, and I started categorizing where all my losses came from, right? And then every time, I remember back then, like every week, I would start reviewing all of the reasons why I kept losing. And then over time, I'm like, okay, I'm losing a lot because I'm trading parabolic coins. I'm losing a lot because of the FOMO of longing parabolic coins and also shorting parabolic coins. And this is just recently, like, this was just one of the most recent things as well. Just in 2021, I took a gigantic ass loss. So this, if you guys see here, I post my losses. I took a $103,000 loss. Okay, this was on Axis. That's why I don't trade Axis anymore. I took a $103,000 loss. I was trading $1.5 million or 1.45 million. And I took this loss because I was chasing a parabolic coin. Axis was at $97 or hitting 100. I'll just show you it if you guys are curious. So this is one of the coins that really changed up the way that I started trading. I remember this coin so fucking well when I lost it, okay? Right here. On October, what day was it? It was near $100, right here. Because I thought it was going to psychologically stop out, right? So if you look at the date right here, the date is October 1st, right? It was like right around here. I thought it was going to stop at $100, but look at what it did instead. It didn't stop. It went to 120 on that day. So it could have been a $200,000 loss, but I stopped myself out. Thank God I did. I stopped myself out at, I think, 7%, but it went up 20%. So I could have lost, actually I could have lost $300,000. So since then, I started creating rules about parabolic rallies, right? And then after that, I've never lost, like since 2021, to trading a stupid parabolic rally coin. So the whole point of this, what I'm saying is that we must understand why we're losing so we can improve. So make sure you guys are documenting why you are losing and reviewing it either weekly or daily, right? This way, it's going to be in your head. Now, think of that guy that's reviewing just like that every single week or daily. Do you think that person has a way better chance to be a professional trader and succeed long-term than the person who just looks at their loss and tries to mentally remember it? You know, come on. You guys know the answer. So you have to you got to go through the extra mile to become this trader you know you can be, right? You can't do the bare minimum because there's some guy to your left or to your right that's putting in way more effort than you, okay? So build that trading history of yours, document why you're losing. When I first did it, I was printing shit out, right? I was like doing it in Word, and then I would print it out and I would like make notes in it. It was crazy the amount of effort I went through to learn about myself, right? It's kind of going long already. I think I'm going to just leave it here and answer more questions another day. I don't want to make the video longer than 40 minutes. And it's almost lunchtime. I will cover risk management better for the Discord group. Okay, guys? Yeah, I think I'm going to end it here. I appreciate you guys joining me today. I'll cover risk management. I'm going to make like a list of things to... Actually, I'll make a channel for you guys to post your suggestions of what you would like me to cover. Of course, I can't cover all of them, but I will try to choose the ones that I think people would most benefit from. So thank you very much for joining me, everybody. I appreciate all of your time. Make sure you guys hit the thumbs up button if you guys enjoyed my content. And for those that want to join my Discord group where you're going to get about 5 of these types of live streams weekly, well, maybe 3 to 5 good live streams, join my Discord group in the link below. It's going to be worth 100% of your time. Anyways, thank you very much for joining me, and I'll see everybody soon. Let's take a look at UMA in the Discord group. I want to trade UMA.